Hi, this is Brian Linchey with your mortgage and housing update. Bond yields moved higher this morning, which typically puts upward pressure on mortgage rates. The main driver appears to be renewed concerns in the Middle East as optimism around a U.S.-Iran peace deal is fading. The Fed also released minutes from their April 29th meeting. Overall, they sounded fairly hawkish, with many participants open to raising rates if inflation stays persistently high. However, there were also some members ready to cut rates if we see clear progress on inflation or further weakening in the job market. Markets will now look to new Fed Chair Kevin Warsh for direction in the coming months. On the housing side, April housing permits rose a solid 5.8%, beating expectations. However, the gain was mostly in multifamily units. Single-family permits actually fell to the lowest level since last August, which means we're still not seeing the meaningful increase in new home supply that buyers need. Rental data from Cotality showed single-family rents rising 1% in March and 1.3% year over year, a relatively modest increase that continues to show some cooling in the rental market. The labor market remains strong, with initial jobless claims dropping to 209,000 last week, still at very low levels. The housing market continues to show resilience on the demand side, but new single-family construction is still struggling to ramp up. This imbalance keeps the market competitive for buyers in many areas. If you're thinking about buying a home, refinancing, or just want to explore your current options, I'm here to help you find the best solution for your situation. Feel free to reach out anytime with questions.